welcome everybody to the second episode of Real Talk Real Estate with Barbie Dream Homes. I'm Robert Johnson. We've got Joe Barbie, owner-broker of the company, and today Jim Butler, Goosehead Insurance. We're going to talk about first-time home buyers insurance, not just first-time home buyers, but insurance in general when it comes to real estate. So tell us, Jim, like if someone were to be a first-time home buyer and they come in, they have no knowledge of insurance at all, what are some of the things, other than it being required if you're financing your home, but what are some of the benefits, I guess, of homeowners insurance, and how does that differ from, say, car insurance?
Well, let's start with how they're similar.
All right. Sounds good.
Liability. You know, we walk around, you drive around, you see billboards on every corner. These attorneys saying, one call, that's all. Right? That's the biggest coverage that you get out of your auto and your home is liability insurance. So that if someone does try to sue you, you have coverage, $100,000 the minimum. We always recommend at least $300,000, $500,000. You can purchase umbrella policies up to $1 million.
Okay. Gotcha.
Beyond that, of course, if there's damage to the home, you want it to be repaired, just like your auto insurance. If you damage your auto, you want someone to fix it.
Right.
So and you don't want to have to pay for it.
Yeah.
It would be referred to as dwelling coverage.
Gotcha.
The dwelling coverage is the driver on the insurance policy. We determine a replacement cost for the home. What is it going to cost if this is a total loss to rebuild this home? That's where you start. All of the other coverages, your detached structure, your personal property, your stuff, additional living expenses are all figured as percentages of that dwelling.
Okay. So if Joe wanted to, say, cover his Rolex collection, I'm just joking. But if you had someone that had, say, a lot of personal property, you can also cover that too, right?
Right. Great question. Your personal property coverage on your home has limits on certain things such as jewelry, firearms, fine arts, stuff like that. You would want to schedule on a separate policy called scheduled personal property.
Okay.
I have a question on that. So, isn't it a good idea to keep a somewhat of an inventory of those type items?
Absolutely. People would be amazed if they really sat down and did an inventory of their home to realize how much it adds up. Because your personal property, I mean, if you take the roof off the house, turn it upside down, anything that falls out is personal property. It's clothes, furniture, cooking utensils, TVs, everything. So you may have 50% of your dwelling amount of personal property coverage, but you may have a lot more personal property.
Gotcha. Yeah, that makes sense. So if a tornado comes or something like that, it'll not only covers rebuilding the house, but all of your, I did that not long ago, actually. I did somewhat of a inventory and wrote down all my serial numbers, because think about that. My guitar gets stolen, I don't even have the serial number written down. How are they going to find it at the pawn shop or whatever? You know? So,
and to schedule it, you're going to have that. You're either going to have appraisals or bill of sales to do a scheduled. The other thing you pick up if you schedule the personal property is mysterious disappearance. That means I lost it. Your homeowners is not going to cover I lost something. It will only cover theft or other named perils.
Oh, okay. That makes sense.
I have another question.
Yes, sir.
I didn't think I had any questions to it, but now I have questions. Is your car an extension of your house? Like for personal life, your car gets
for
broken
liability, yes, it is.
Okay.
Absolutely. And it's funny, that was one of the first things I learned or that I was taught was when you get in your car, you're basically putting your house in the trunk of your car. When you go out, you are carrying the liability of everything that you own. Your house, your savings, your retirement accounts, everything you have is liable. If you, God forbid, have an accident and you kill somebody and their family comes back and sues you, they can take or try to take everything that you have.
We try to keep it lighthearted. we're turning this into a horror show here. No, seriously, one of my favorite things, though. horror.
Yeah.
So let's get it scary.
So, that is the dirty side of insurance.
Right.
Is the liability is to protect you from that, and that's why on auto people carry 2550 because that's what the state wants you to or requires you to have.
Mm-hmm.
That's not enough insurance. So 250, 500 is what's required on the auto, with 100,000 for property damage.
Right.
300,000 is the minimum liability coverage on a homeowner's in order to purchase that umbrella policy that would be your protection against that worst case scenario.
Does that answer your question?
Yeah.
Okay.
Now let's reel it back in a little bit for the first time home buyer, because something I wanted to explain is the process is whenever when you go to buy a house, you're gonna, as part of the closing process, you have to call an insurance company and you have to get quotes for your insurance, and then they send over a declaration page to your lender, I think, and maybe the attorney, because that's all part of your house payment.
Correct.
There's a couple of things that the mortgage company will not allow you to do on your own. There's actually two things. One's pay taxes and one's pay insurance, because those two things are the biggest risk for them. If you don't have insurance, your house burns down, you ain't gonna make payments on it.
Correct.
If you get behind on your taxes, it gets seized. All right.
Right.
So I know that it can seem kind of scary, but it's really not. You just have to, usually we tell people, we ask them if they have car insurance, who they have car insurance with, and sometimes they get a discount for bundling.
Correct.
But anyway, once all that's said and done, your payment is made up of principal, interest, insurance, and taxes. And so when you make that $1,000 a month, you're not having to pay $1,000 a month, then pay your insurance, then pay your
Right.
taxes. It's all rolled into one. So I'm trying to keep it less scary. I'm
Yes.
over here.
Yes.
So
yes.
the biggest thing about insurance is find someone you trust, and then go and make sure you're properly covered, because the difference between good coverage and bad, well, not good coverage, light coverage and heavy coverage usually is not that much.
Yeah, and a lot of people will try to save money by writing lower limits. Not writing at replacement cost for their dwelling, writing at what's called actual cash value on your stuff. You might save a little bit of money on your premium, but you're going to cost yourself a lot of money if you've ever had a loss. So you want to make sure that you're written at replacement cost, which 90% of the time or more is going to be higher than what the actual market value is on the home.
Oh yeah.
Your contents, you want to make sure you have replacement cost on your contents, because you go out with your laptop and you just spent $1,500 on your laptop, the house burns up, you need it replaced 3 years later, they're going to say, well, that $1,500 laptop's only worth $1,000 now.
Appreciation.
Okay? It's just like a car, that if you
yeah.
don't have replacement costs for your contents, then they
Yeah.
depreciate all of your stuff.
Right.
So you want to make sure that you do have replacement cost for that.
I'm gonna kind of put you on the hot seat here.
I love it.
Joe
Okay.
loves doing that.
Well, I mean, because this is a question that I could see being answered a couple of different ways, and I don't know how you're going to answer it. But what is your, what do you think about deductibles? Like, because that's another way to save money. People say, instead of a $500 deductible, I'm gonna get a $5,000 deductible.
I just had a conversation with an insured about what kind of deductible to write on her policy. We were quoting $1,000 deductibles, trying to save a little money. I actually recommended to her $1,000 for all perils except wind and hail, and did $2,500 for wind and hail. The way I look at it is, your homeowner's insurance is going to be more of a catastrophic loss insurance.
Right.
Okay? If you have a loss and it's going to cost $1,500 to repair something, I'm going to recommend that you don't file a claim.
Right.
Because you're only going to, if you got a $1,000 deductible, you're only going to get $500 from the insurance company.
Right.
But now your rates are also going to go up $400 to $500 a year. You just cost yourself money by filing a claim. It's your right. If you want to file a claim and get your $500, you can file the claim. All I can do is recommend.
Right. It's funny that you brought that up, because that's come up in the past with me too. Is I have, and I don't. When it comes to insurance, I know just enough to get me sued. But like I told you earlier, I
Hope
used
you have high limits.
I used to be a licensed insurance agent for a little while, but that's exactly the way I look at it too. I mean, deductibles.
I don't have a problem with $2,500 all peril deductibles. Now, if you know that you'll never be able to afford to pay that $2,500 if there's a loss, then you need to stick with the $1,000 deductible.
Pay a little more extra.
But if
month
you're
every month.
self-insuring. That's what your deductible is. That's
Right.
the amount of risk that you're assuming. So the more risk that you assume, the less you're going to pay for your insurance.
I do property management too. I actually have two companies. I have Barbie Dream Homes and we have FHG Property Management. And I have that same conversation, I can't tell you how many times with my owners. Something will happen to the house and I'll get an estimate on it. And it's like, you say, it's like the estimate's $500 or $600. Should I make a claim? I'm like, no. I mean, why would you do that? I explained it just the way you explained it. And knock on fake wood. I've only had one time in, I think I've been doing property management for 12 years, where I actually had a tree.
That's recently, right?
No, it was like 4 or 5 years ago.
Oh, okay, okay.
I had a tree fall on the front of it and basically cut the first part of the bedroom completely out. I mean, it was bad. It was pretty bad. So
Right.
in that case, yes, because they had to replace part of the roof, they had to rebuild the front of the house, they had to go through and, I mean, it was about a $45,000 claim.
Right.
Wow.
Yes.
Yes.
Claim it. Obviously, that's a no-brainer.
Right, absolutely.
But you want to keep your insurance premiums down because every time you, and correct me if I'm wrong, every time you make a claim, you change your risk rating.
Correct.
So I mean, you don't want to do it. It's not a good business or a good money
So
decision.
you could file a claim that no payout is made on. Some insurance companies, when I go to quote you, will let me remove that. Some of the more competitive insurance companies look at that as an incident. And even though there was no payout, it can still count against you.
So why would you do a claim with no payout? Explain that.
Go and file a claim before you found out that the payout's less than what your deductible is.
I gotcha. So not having a good insurance agent.
Yes.
I mean, really.
I
I'd
mean,
like to make a claim, and they just, oh yeah, do working
Right.
from home agent. Not
Yes.
agent, but representative at the call center.
right,
Yeah.
right.
Gotcha.
Okay, I think we're about to wrap this thing up, but
I got one more thing that I'd like
Okay.
to say real quick. Something that a lot of homeowners do not know. A tree falls on your house from your neighbor's yard.
Mm.
Whose insurance covers it?
Should be the neighbor's yard,
Nope.
right?
it's not.
No,
wherever,
it's
wherever the tree
Yours.
lands.
Where the tree lands is where the coverage comes from.
That's
Is that what happened?
No, but I did have that happen, and I kind of started to go to war with the next door neighbor on one of my rental properties, and we found that out. It's wherever the tree lands. Which
Okay.
to me is crazy because you have no control over if they, take care of their trees. If it's a
Now, if it's a dead tree that's been dead for years, your insurance company can go turn around and sue them and get your deductible back
all right,
and show it because that is negligence. But
Right.
the claim is going to go through your insurance if it fell on your house.
so before we sign off, can I ask you one more question?
Absolutely.
Okay, and one more scenario, and I've kind of drive this home because I kind of already know the answer, but it's all part of the home buying process. Now, whenever we're working with buyers, obviously we tell them, we try to get the lender to counsel them on their credit because the higher the credit score, the better program you're going to get in,
Right.
the lower your interest rate. And that's the same with insurance now,
Absolutely.
because if you go in with a lower credit score, your insurance premiums are going to be
Insurance is absolutely based off of credit today.
So here's the thing, guys. If you're out there and here's nothing against getting first home ownership with some of the first time pros with lower scores. We do it all the time. As long as you understand what you're getting into. If you go out there with a 590 credit score, there are lenders that will lend you money on a house, and there are insurance companies that will write your insurance.
Mm-hmm.
But there's a cost.
Correct.
And that's
Correct.
so sometimes it's if you can just do the little things like a debt to income ratio, things. I mean, just whatever you get to credit counseling from your lender, and just get that credit score. Sometimes the difference between hundreds and hundreds of dollars, maybe thousands of dollars,
Yeah.
It could be.
Absolutely.
it is nothing more than getting your debt to income ratio down 10 more percent.
Yeah.
So I mean,
That makes a big difference.
I said
It
something
does.
real vague last time. I don't know if you cut it out or not, but there's a certain person
Oh no, I left that in there.
Yeah, okay, that'll tell you all this stuff about the credit. But I'm here to tell you, credit scores are important. Okay,
Yeah.
let's not fool anybody. In the
Yeah.
perfect world, everybody has cash and they're rich enough to buy everything. But until you are there, and there is a such thing as self-insured.
Yes,
Sure.
absolutely.
And there's a thing, to be where you've got enough money if something comes up that you can take care of it. And
Right.
you'll maybe get to a time in your life when you can go pay cash for a house. Then yeah, if you're a multimillionaire, and got plenty of assets, maybe credit's not as important to you. But if you're somebody, the
Yeah.
average person, you need that credit
Yeah.
score.
That multimillionaire, though, is still going to have a minimum of $500,000 liability coverage on their house and
Oh,
an
yeah.
umbrella.
And a lot of times,
Yeah.
don't get it twisted. Don't get it twisted now, but a lot of people who have a lot of money use other people's money. So
That's what insurance is.
yeah. So
Yeah.
and that and if you use credit wisely,
Yeah.
then
Right.
you can use their money, keep your money
Yeah.
freed up.
Right.
I work with an investor. He's a cash investor, and but if you need something, and don't want to tie up his money, you can get short-term credit stuff to kind of use their money to do remodels and
Right.
stuff, and then pay it off. And we're not paying. The key is don't pay as little interest as
Yes,
possible.
minimize that interest.
And everything, paying as little insurance, interest rate, everything, and by keeping that credit score in check, keeping it right, no, not overextending yourself. If you've got the 590 credit score and your interest rate's going to be a little higher, your insurance is going to be a little higher, don't go in and buy the house that you qualify for. Work on your payment and buy something that you're comfortable with spending. Not just because the bank says you qualify for a $300,000 house. Don't go
Right.
buy that.
Right.
Well,
Buy
here's
something you can afford based on your payment.
in closing,
Again,
because I don't want. Here's the thing: we're
I
going
got
to do
one more question. I'm just
we're going to do a whole episode on credit and stuff because I'll let you take it from here.
Yep. Well, thanks for watching, guys. Really, we really appreciate it. I'm going to put our contact info on here. Jim's contact info. If you need good insurance rates, call this guy. He is local in Warner Robins, and also, of course, Barbie Dream Homes are here too. So call us if we can help you in any way. Peace out.
And don't forget FHG Property Management too.
Oh yeah.
For all your rental needs.
Can't sell you a house, he'll rent you one.
Right.